We are at the finale panel of the evening where we will be discussing the future of NBFCs and Fintech collaborations. To moderate the session, I would like to request Avinash, Senior Vice President and Head Institutional Sales, Alliances and Strategy, NIT Fintech, to please come up on the stage. Can we please welcome Mr. Avinash, guys? Thank you. Then we have Sabyasachi Rath, Chief Executive Officer, Purple Finance Limited. So can we please welcome Mr. Sabyasachi? Come on, guys. We need the energy to spread in the room. Next up, we have Nitin Agrawal, CEO, Navdhan Capital. So can we please welcome Mr. Nikhil? Can we please welcome Mr. Nitin Agrawal, who is the CEO of Navdhan Capital? Okay, moving ahead, let's welcome Mr. Nikhil Gupta, founder and CEO, Sage Capital. That's Mr. Nikhil Gupta. Come on, guys, come on. We need the round of applause rolling in. Then we have Rohit Katyal, Head of Enterprise Sales, Cash-Free Payments. Can we please welcome Mr. Rohit? Then we have Shiv Shankar Panigrahi, Chief Operations Officer, Capital India Home Loans Limited. Can we please welcome Mr. Shiv Shankar? Then we have Naval Kagalwala, COO and Product Head, Shriram Wealth. Can we please welcome Mr. Naval? Then we have Mr. Keyur Vinci, Product Head, Retail, SME, Arca FinCap Limited. So can we please welcome Mr. Keyur? Over to you guys.
Thank you. Good afternoon and welcome to today's session on FinTech and future of NBFC. And I'm happy to be moderating this session with the dignitaries along with me. And we are promising to give you a valuable insight throughout this session. My name is Avinash and I represent NIT Fintech Private Limited, a digital lending platform provider. We are working for co-lending, digital lending, and treasury management solutions. We are already handling a client base of around 60 plus financial institutions, which includes 15 large banks and NBFCs, and we are based out of Mumbai. Sorry, no problem. Yeah. So guys, as we were talking about that, I'll make sure to get the maximum learning out of all the dignitaries who are there with us. And you'll be happy to know that today the panelists that we have a very diversified panelists, whereby few of them are from lending, few of them are focused towards digital co-lending solutions, and few of them are from the wealth tech industry. So without any further delay, I'll first like all my dignitaries to please introduce yourself so that we can start with the session. Over to you.
Good evening, everyone. I'm Sabyasachi. I'm the co-founder and CEO for Purple Finance. We are a listed NBFC on BSE. We started our journey in 2022 and we do small ticket micro lab. We are actually present in 5 states with 37 branches and 350 plus employees. We are basically a member of 4 people who have started this company who are veteran from various banks. So that's about us. Yeah.
Hello everyone, my name is Nitin Agarwal. I run a firm called Navdhan Capital. We are a rural fintech firm where we fund rural small businesses in remote rural areas of India. Thank you.
Hello. Hello. Yeah. My name is Nikhil Gupta and I'm the founder of Sage Capital. Basically, we are a wealth management firm. We aim to provide unbiased financial solutions to the investor community. We are a small team. We started in 2021 and our agenda is also to spread financial inclusion to the smaller cities in India. Thank you.
Thank you, Nikhil.
Hey, hi, good evening, everyone. I represent Cash-Free Payments. My name is Rohit Katyal and take care of the business for Cash-Free. Cash-Free Payments is one of the leading payments fintech plus an API banking company. To introduce, we power the entire money movement across businesses, across industry, including lending or the wealth. And it's glad to have a diversified panel here. We have a lot of learning around that. Thanks.
Thank you, Rohit.
Good evening, everyone. Myself, Shiv Shankar Panigrahi. I am from Capital India Home Loans. I am taking care of operations, admin, and compliance. We have around 27 branches across India, and we are basically taking care of affordable housing. Thank you.
Hi, good evening, everyone. I am Naval Kagalwala, COO and Product Head at Shriram Wealth. We are in the wealth management business. We are part of the 50-year-old Shriram Group, which you would have all heard of. We are one of the newest businesses within the group. It's a JV between the Shriram Group as well as Sanlam, which is a South Africa-based financial entity with over 100 years of tradition.
Thank you, Naval.
Good evening, everyone. I am Keyur Vinci. I lead the product partnership and cross-sell for Arca FinCap. Arca FinCap is a NBFC promoted by Kirloskar Group. We are mainly into retail and SME lending and now have built a book size of close to 7,000 crore. Look forward to an insightful session with the members here.
Thank you, Keyur. So, we'll start with the session. I first want to understand from Shiv Shankar. I want to understand the digital lending aspect. So that's the reason I wanted to start with you. So Shiv Shankar, what I have learned about you is you all have reduced your loan processing time from 15 days to 45 hours through the digital transformation. So my question to you is how your partnership with FinTech platform transform operational efficiency and customer experience in the home loan segment, and what metrics demonstrate this impact?
I think these are very good questions you have asked me. So basically, right from legacy NBFC to digital NBFC, we have changed a lot of things. And if you see in every stage of lending process, we have automated right from sourcing to the disbursements. There are different types of applications available in the market. Not only that, we have also integrated a lot of things in our LOS and LMS systems. We have taken since we are into the secured product, we should not take more than 2 days for sanctioning any of the loans. So basically the profile sanction will be within 24 hours. As far as the property is concerned, we do not take any soft on the property side. We do make a hard call on the property, but yes, profile side, we took within 24 hours, we give the sanction letter.
Thank you. I think that was very insightful and a strategical call that you all have taken. Now I want to talk to Sabyasachi Rath. Sir, you are being a pioneer into this segment and one of the India's first blockchain-based co-lending platform that you have come up with, which expanded companies' loan portfolio by 300% in just 24 months. So I want to understand a lot from you. So my question to you is, how has co-lending model evolved in India over the past few years, and what unique advantages does Purple Finance bring to co-lending partnership with fintech companies?
Yeah, thanks, Avinash. I think just correct to you, we don't have a co-lending platform. Yeah, but we have grown by 300%. So the second part is correct, the first part is not correct. But we are building a co-lending platform on our LOS and we will be live by next month. So let me go to the genesis of co-lending. So it all started in 2018 when RBI came up with a circular and it was called co-origination for PSL. So RBI said that the PSU banks are not able to cater. I think the advantage for all of us, Nitin is a very good friend. We have Arca, who is a 7,000 crore big father of all of us. Yeah, so we all do a last mile delivery. We go to the customer at the last mile and we fund them which the PSU banks generally don't. They're also getting their act together. So RBI said that this is the segment which is unbanked, unserved segment, which is part of the PSL, and the PSU banks are not able to fund them. So they thought that there is a good idea to have a co-origination. So they came up with a circular in 2018 when they said that the PSU banks can do a co-origination. And that circular was basically between banks and NBFCs. There was nothing called fintech. I think 2018, the fintech word didn't exist, right? Then from there it evolved. It came 2020. Then this circular became something called a co-lending model. So it became a CLM circular. Then CLM came into CLM1 and CLM2. So co-lending module, CLM1 basically is between a junior partner and a senior partner. The case gets approved. CLM2 is that a junior partner. Junior partner is basically primarily, I'm thinking, a NBFC will source a portfolio. Then they will do a disbursement, they will pass it on to the senior lender, then senior lender will choose from there and they will reimburse. So that is CLM2. So then from there came the fintech. So if you see the fintech ecosystem in the country, the fintechs primarily are mostly not registered as a NBFC. So they are called the digital lenders. So then the fintech fiasco came in, a lot of fintech companies, RBI had a lot of concerns on fintech, Chinese app came in. So RBI thought that this is going out of the hand. They came up with a digital lending guideline. So a DLG guideline came in 2021, which said that there can be a partnership between a NBFC or a bank and a fintech. They are called a lending service provider, LSPs. So LSPs and the REs. REs are basically registered entities which are either a bank or an NBFC. So how can they do a partnership between themselves? So these are the fintech companies. And then finally, if you see, yesterday RBI has come up with a 22-page circular on digital lending guidelines and DLG. So things are getting better, things are getting tighter, things are becoming larger. Just to give you a sense of the co-lending volume, there was a recently CRISIL had come up with a circular. Initially when it was envisaged that the co-lending will help the PSU bank, actually it became the opposite. It really helped the NBFC, the larger ones and the smaller one, or the larger or the fintech companies doing the tie-up rather than a PSU. But PSU banks generally are not that agile. So we are talking about in September 2024, the co-lending AUM for the country was 75,000 crore, which is expected to go up to 1 lakh crore in this quarter. And as per that CRISIL report, the PSU bank and the NBFC is only hardly 11,500 crore. So the fintech and the NBFCs, they play a very large role in the co-lending, and it's getting sophisticated, it is getting technology oriented, it is becoming more guided, more regulatory. So it's a great thing happening for the country, which is a win-win situation for both. Now coming to Purple, why Purple? I think any co-lending what you do, and he's a pioneer in co-lending, has done a lot of co-lending, a lot of partnership. What you do in a co-lending, what you need is a mix of mind, or what you call match of mind between the two partners. So how agile you are, how frictionless you are. For you, the customer looks not at two entity. Even RBI also says that this is not two entity. The customer will look at a registered entity only, RE. So what you need is seamless, agility, professionalism, disclosure for the customer, transparency for the customer. So these are very required for a co-lending. I think as a Purple, as an entity, you are a new entity, you are a 2 years old entity. We believe in co-lending. We already have 3 partners where we are junior partners and 2 BC partners. We have roughly around 10% of our portfolio in co-lending, and we expect that to go up to 20%. So we provide you all this, and with our LOS having a co-lending platform, we believe that these are the virtues which will be there and which will help you in designing a co-lending module or co-lending. If you do co-lending with us, it will be a win-win situation for both of us. Yeah, thanks.
Thank you, Sabya. I think you covered almost all the topic which is related to co-lending. However, as you rightly mentioned, Nitin is taking care of co-lending, and he has already done lots of co-lending. So my next question to you, Nitin, what we have seen is you have already secured strategic investment from major international investors and successfully implemented AI-based credit score model, reaching 2 million previously unbagged customers. So from your understanding and your experience, I want to understand how Navadhan Capital leveraging technology in its co-lending partnership to reach underserved segments, particularly in rural and semi-urban areas.
I think two parts to this. One is that if we are looking at a specific segment which is underbanked, and we're talking about retail and we're talking about rural, we really need to make the tech fit for purpose. We need to bring the best out of tech to make it work for that space. For that purpose, what we have done is we've created a tech platform which we call as ASEN. So Navadhan owns a tech platform called ASEN, which is what we've invested heavily on in terms of building. It's a fit for purpose tech platform which allows seamless onboarding of customers, essentially riding on India's stack. The whole of India stack is what we are doing. So in a way, we are like an example of how India stack can be leveraged with good quality tech and engineering team in place, and then make it work for the lenders. When I say make it work for the lenders, for people like Arca and other bigger entities, we originate loans and we tie up with them through APIs. So they don't have to worry about who the customer is because the customer is available to them as data points. And of course, there is a whole lot of concerns around cybersecurity, data confidentiality, and consents, which we take care of on this platform. The idea was to build it compliance first. And like Sabya explained, there is a history to how co-lending has progressed. We've taken care of the history and we've also taken care of the future. Because luckily, RBI typically tells you much in advance in terms of what they're going to come up with. And therefore, you have time to really build your tech accordingly. So it's a compliance first, customer-centric, fit-for-purpose tech platform called ASEN that we have built, which allows the lender partners to get onboarded seamlessly and participate with us in funding those rural small businesses. That's how we've used technology.
Good to know this. We have been referring to Arca, so definitely the next question is to Keyur. Keyur, you have already pioneered India's first supply chain financing platform, especially for MSME, and you have grew the MSME book from 200 crore to probably 7,000 crore now. So we'll definitely be interested to know your insights, and my question to you is, how is Arca FinCap using data analytics and alternative credit scoring model in its co-lending partnerships to expand addressable market for SME financing?
Thanks, Avinash. So majority of 7,000 crores is SME lending, and some bit of it is, of course, fintech partnerships that we do. The last month numbers are we disburse almost 200 crore through fintech partnerships per month, right? So we are gung-ho there. In terms of data analytics, I think it is spot on. Both fintechs and NBFC do like a lot of data, but different types of data, right? So fintechs are very good at collecting non-traditional data, which are not traditional data in terms of financial data or banking data, right? They are good at collecting rich data sets, which NBFCs do not have access to. And I think there is a win-win model available there in terms of a fintech collecting non-traditional data, and then NBFC bringing their own expertise in terms of credit risk, compliance, all of that, and combining both of that. I think there is a huge scope to do some bit on data analytics, right? So when we work with fintechs, we slice the customer segment into three parts, right? One is what they sent it to us for approval, and I eventually approved it, right? Second is they sent it to us, but I rejected it for some reason. And there is a third side which never came to me, right? And all three sides will perform very differently over time. And once you analyze that, you will come to know where are you going wrong, where are you going right, right? And there is a huge scope of analytics there in terms of how can you get better in terms of serving a larger segment of MSMEs. So huge work done there, but a lot of it to do. Credit scoring, again, I think the fintechs like in terms of instant decisioning, which at least the larger NBFCs find it tough. We have been able to crack it, and I think that speaks in terms of the volume and size we have built. So that's it in terms of credit scoring. I think it is all about agreeing on a common parameters, and then once it goes live, it has to be very smooth for both the partners. I think as long as the tech and the process is smooth, it can scale very fast and at a very high levels.
Good. Yes. Be it digital lending, any sort of lending, I believe after disbursement, the real games comes to the payments and the collections. So over here, I'd like to call Rohit. Rohit, you have been instrumental in cash-free payment, achieving unicorn status. I'm not sure, I read somewhere that you led the launch of India's first UPI 2.0 auto-pay solution as well. So would want to understand from you, how are embedded finance solution changing the relationship between payment providers, NBFCs, and consumer-facing businesses? And what role does cash-free play in this ecosystem?
This is a very elaborative question. But before I come to the answer, when we got together and I was looking at the topic, a quote comes to my mind from my childhood. I've been basically following that quote. Alone we can do very little, but together we can do so much. And that's where the collaboration is all about today when we talk. And this quote has been from Helen Keller, which is a very old, very famous US author. And the principle of collaboration has been since ages, as rightly said by Sabya, that the old school versus the new tech. It's all about how we are into a fintech marriage. Fintech is nothing, it's a marriage between the tech and the financial services, right? And everybody has, both parties have their set of rules, which our friend told about, that the challenge is how we mitigate and work together. Similar goes for us in the business. We are enablers to it. So when we say payments, space, payments, fintech are the enablers, especially for this industry, when it comes especially to lending, or maybe my friend from Wealth, Mr. Naval is here, even in part of the investments piece also, where we bridge the collaboration at various areas, right? When we talk about, let's talk about, if we say cash-free today, we have an India stack for the entire lending platform. The journey starts from where we onboard a customer. The identity check is where our tech helps in streamlining those processes for the lenders. And since it's a digital age, DLG is in picture. We are also authorized by RBI to operate in the payment aggregator space. So we are compliant with those things up. Data security is taken care. Then we go to the second side, before coming to the collections actually, comes the dispersal piece now. Today, fintechs like us are helping in automating the dispersals. It's an age when there are thousands of dispersals are happening and instant we call it a space, right? And we help automating via our API banking solutions towards that. Then actually now we have given the money and comes the collection piece. Here is our complete stack works, starting from integrating eNACH or the recurring suite, and UPI AutoPay is the newish solution now, where you can basically create a mandate via UPI and this on a fly. So the entire tech stack is being embedded in the LOS and LMS journeys at different stages. And then even the bucket collections, the seamless collections, EMI collections, post-bounce collections are also taken care via various solutions like payment links we provide. We help them in the seamless collection of the money back on those lines. So that's where we are completing the journey as a collaboration to this industry.
Wow. Thank you, Rohit. Yes, so I think we have talked a lot about digital lending, co-lending, but as I mentioned, we also have wealth tech with us. So, Nikhil, I'd want to understand from you that you all have already built an AUM of over 5,000 crore in less than 5 years. And you also have developed proprietary wealth management algorithm, now licensed to 3 major banks. Not sure, is it only to 3 major banks or now what the number has reached? But definitely would want to understand that how the partnership between NBFCs and wealth tech platform democratizing access to sophisticated financial planning tools that were previously available to only high net worth individuals. So this is something which is close to my understanding also. I want to understand from you that where the industry is going and what all are your plans around it.
So I think from the start when Sabyasachi sir was talking about co-lending and fintech, it started in somewhere around 2018. So what has happened is fintech has been all about lending and payments. From what we have seen in the last few years. Now, there has been a parallel which has developed in the post 2020, that is, when a lot of people were sitting at home, entire new era of wealth tech started developing. Now, of course, there are a lot of regulatory overhangs when you want to connect fintech and wealth tech, but of course, there is a possibility that this will happen, and in certain places it is already undergoing. So if in some way the fintechs are able to connect the wealth to their stack, to their services, because everyone has a different market. Maybe some of the fintechs are only in tier 1 cities and metros. Some are there in smaller cities. So, and even beyond, I'm talking about, let's say, tier 3 cities, tier 4 cities, where currently, if you see the exposure to wealth products is less than 1%. Oh. So, overall on a India basis, it's, I think equity exposure stands at around 5%. And that is majorly contributed by Maharashtra, Gujarat. So these are the only two. So, but overall, if everyone has to benefit from wealth products and increasing the wealth and proper financial planning, it has to be more reachable, and we can reach more people by fintechs and other platforms, probably also some co-lending platforms and NBFCs. So all of these will play a huge role, and because of economies of scale, we'll also see a huge reduction in cost in reaching out to more people.
Absolutely. But you said that penetration is still under 1%. Is that the...
In tier 3 and tier 4 cities. And in fact, if you see, for example, Madhya Pradesh as a state, if you see the entire state, the penetration is less than 1% for equities. And then you go to northeastern states further, it will start decreasing over there.
Every moment when you open your television, they will say that mutual fund sahi hai. But then, okay, wow. Now, Naval, would want to understand from you, with the changing investor demographics, how do you approach product innovation in wealth management? And what's your process for spotting the next big need?
Okay, so 2 parts to it. Yeah, sorry. So 2 parts to the question over there, so I'll just take each of them separately.
Sure.
So on the first part, right, there are 4 key things, right, when it comes to product innovation, which become the pillars to identify or create new products. First is the technology, right? I mean, today, there is nothing which is really possible without a technology solution, right? I mean, that becomes the backbone, or rather the base. On which you try to create something.
Absolutely.
Right? And that is true whether it is you're looking at a back-end functionality, whether you're looking at a client-facing, the internet banking or the mobile app, or even the client servicing related tools that you use, all of it requires some sort of technology, right? And as we go ahead, it's just evolving more and more. So that obviously becomes the base for any new product. The second part is data, right? Information. What sort of product would work in what environment, right? The client profile that Nitin just spoke about would have very different requirements to maybe an affluent client, to an HNI client, to an ultra HNI client, to a family office, to an international investor. Each of them would have very, very different requirements in different market environments as well. So a lot of it becomes data relevant, what would work for a particular client in which type of environment, and then the correlation between each of these data rights, right? The third part, of course, is the regulations and the taxation, right? Because if your regulations don't allow you something, then it's irrelevant for you to try and do anything at all. So that obviously becomes very important, that your local regulations should allow or permit you to do what you intend to do. And within this, taxation again becomes a very important part. From an investor perspective, I mean, his core focus is to maximize his return, right? And a large part of the returns that you make will possibly be taken away by taxation. There are different forms or different types of returns that you can make, and each has a different tax rule applicable to it. So something which, let's say on a product you earn 10%, but if you are paying 35 or 40% tax on that, you will end up with only about 6.5%. Versus something which is giving you, let's say, an 8-9% but has a lower 10-15% tax rate, your post-tax returns will be even higher. Correct. Right? So then that also becomes very critical for each product that you work on. And finally, the most important is, of course, the client need or the client feedback, right? Because everything starts and ends over there. You may do whatever you want on technology or data, as long as it doesn't work for the client, it's not going to help. So all of these four, I mean, either individually or collectively, become the base for you to decide which product that you want to create, which you want to offer, and take it to the client. The next part of your question, right, in terms of how do you innovate on some of these products, right? The last part which I mentioned, and I'm just continuing from there, the client need or the client requirement is obviously the most relevant and important over here, right? But alongside that, you will also have a lot of data points which you will look at in terms of the macro and the micro, right? A situation as it exists today will call for different types of investments versus if it's a very, very bullish environment, right? It may be a slightly different product that you may offer. You would also want to look at, let's say, what's happening in other markets, right? I mean, I'm just going back a couple of years. You had a lot of discussions about passive products, Absolutely. Right? I mean, in markets like US, which are developed markets, a large number of investors were moving towards passive products as an investment proposition. We picked it up over there, and in India also passive product as a product proposition started to become substantially post that. So if you look at it today, investments or the total AUM in passive products is almost about 11 lakh crores, right? And this is a part of the 65 lakh crores of the overall mutual fund AUM. So in a short span of time, we are already at about 1/6 of the mutual fund industry purely in passives. So all of these put together then decide which product you take and how do you innovate.
Thank you, Naval. That was very insightful. I'll again get back to Shiv Shankar. Sir, I would want to understand what are the key challenges. So would want to discuss more about now the challenges which comes under the implementation of end-to-end digital lending solutions in secured lending products like housing loan, and how are you addressing these challenges using the fintech solutions?
So key challenges is basically how to handle the regulatory compliance. So day in, day out, we have some circular from the RBI which tighten your compliance part. So normally whenever they do the inspections, their main focus is to the KYCs, right? Whenever you do the onboarding of customers, the kind of risk categorizations you are making to all the customers, whether they complied as per RBI circular or not. So that is the key challenge. Secondly, there are certain customers which are into a low category and suddenly, after their credit worthiness, they goes to the high category. So whether that changes of risk categorization, are you complying or not, that is also they are taking care of. So it is not that when the customer is onboarded, at that time, the risk categorization may be, say, low. But during some time period, okay,
you suddenly have to monitor it.
Exactly. Yeah. Suddenly, if he makes some default, the categorization change.
Correct.
So that is the key challenges as far as the secured business we are concerning about.
And how do you taking care of that piece?
So the best part is we have an app which monitors. Okay, so RBI says that your high customers KYC should be 10 years, high, low, and medium. So 2 years, 5 years, and 10 years. So we have to repeatedly, see the customers whether they are into the same category or not. So that is required. Monitoring is continuously required.
Absolutely. And there is a lots of other challenges also. I think with respect to co-lending as well, Mr. Sabyasachi, I would want to understand from you, what regulatory challenges do you foresee in co-lending space? And how can NBFC and FinTech collaborate to address these challenges while maintaining the compliance? I think you're the best person to answer this question.
Avinash, actually, I'll say that I don't foresee. It's already on our head, dancing on our head, yeah?
Correct.
So let me just give you an example. What very correctly said by CEO is, RBI has come up with 36 circular precisely in the last 1 year for NBFCs. So they believe that NBFC was a dirty word, but good that they're coming with this circular. So the dirty ones will go out and the good ones will stay, right? People who are compliant, who are governant will stay. Okay. Let me first talk about the good part. So there are 2 circulars now currently which are there. One is a DLG guideline. So the FinTech, because they are not registered entity, will mostly come in a DLG guideline when we do a co-lending. The other one is a co-lending between registered entity to registered entity, which is between NBFCs to NBFC.
NBFC to NBFC.
So what was happening in the market, and the good part is that they will all stop now. I don't want to name NBFCs, but for co-lending, people who are saying that you give me a buyback. Boss, you are 80% lender, I am a 20% lender. You have a 80% stake. How can you ask me to buy back when it becomes NPA, right? So all those will stop now. Somebody was asking for 10%, somebody was asking for enhanced FLDG or DLG. So all these will stop. So RBI is very clear that you can only have a 5% DLG, not beyond that. And it is between NBFC to NBFC, because there was no circular between NBFC to NBFC. It was between bank to NBFC. And in that circular, actually, there was no DLG also. So now it is a uniform DLG, maximum up to 5% you can go. Of course, then it is depending on the bargaining power between the 2 partners, so that you give 2%, 3% or 0%. That's there. So that's a good part of it. The other good part is that RBI is actually talking, the entire circular, if you see the DLG or a co-lending circular, it revolves around 4 things. Most important is pricing. RBI is very sensitive about pricing, saying that the pricing has to be affordable to the customer. Second is transparency and your disclosure to the customer. Everything should be disclosed to the customer. Third is your customer grievance, customer redressal. The entire responsibility is on the RE. It doesn't go on to your lending partner or to your LSP. And the fourth is definitely, how do you calculate what kind of DLG? There cannot be replenishment of DLG and all that. So these are very, very clear guidelines which will make the market extremely, in the sense the information flow will be extremely good. People will be bound to their boundaries. But it also comes with a lot of challenges. So RBI circular, actually the DLG circular says that if a LSP has 5 REs. Suppose you are LSP and you have 5 REs. So on your website, you have to go and say that these are the 5 REs I have, and these are the 5 products. So the customer has the option to go and choose one of the product. I don't know technologically how is that feasible. That's a nightmare for us, right? Because I may be different from Nitin in my risk appetite, in my risk product, in my interest rate. So that's very tough. There's a very beautiful word called key fact statement. Every circular RBI has a key fact statement. So probably I think as a NBFC, I have to make 25 varieties of key fact statement. Everything I do on a key fact statement, they say that go and tell in a key fact statement. Tell the customer on a KFS. Tell the customer on a KFS. So I don't know technologically, that is where you will come in, he will come in, where we will ask you that give me as a platform where I can make 25 KFS, right? So that's another challenge, what you see. Now coming to the DLG, it also says that as a DLG, when you do a default guarantee, it's very clear now that if you have adjusted the DLG, then you cannot replenish the DLG. So you may actually, if you have adjusted, and that is the purpose of a DLG. DLG is called a default loss guarantee, first Correct. Default loss guarantee. Correct. But people used to replenish it, so you cannot now replenish it. So these are few of the challenges which RBI has come up, which all of us have to come together. We have to all discuss, deliberate on this. And, but yes, the good part is that it will make the market making, it will make the market a perfect market, where every player will have a perfect, or their say in the thing. So the old, the one thing which I also wanted to add is that all of us have been talking about blended interest rate, right? So now the interest rate is no longer there. Now the new term which RBI has coined and which fairly is APR. And I'm very sure when this discussion paper will become a circular, RBI will say that your maximum APR has to be so-and-so. So earlier what used to happen, as a small lender, I used to have a kick, right? Because I am funding at 22% and as Arca is funding at, let's say 16%. So I had a kick of 4%. That's going to go now. Or if I have that, then I have to very clearly tell to the customer that your blended interest rate is 22%, but there is a kick of 4% to me. So that's going to give some amount of pain again to the smaller lenders. The larger lenders will be very happy about it, but smaller lenders like us will be very, very painful. So there are so many things which have come in the circular. I mean, I can think of 5 of them, but there are 20 more like that. But yes, it's life. It's also everything has a pros and cons. So there are
so what is your feedback? Is it thumbs up, thumbs down for this, or you are partially happy? How it is?
No, I have a mixed feeling actually, because the mixed feeling is that somebody who's a very large one will not tell me, give me 12% FLDG, give me a buyback, and if your 60 DPD goes beyond 6%, give me another 5% FLDG. He will now stay at a 5%. Yeah, but yes, the other feeling is that kick which I had, the additional interest rate has to be very clearly disclosed now. Yeah. So it's a mixed bag.
That will go.
Yeah.
Yeah. Thank you so much. Nitin. So, yes, we are talking about challenges. So I believe, I want to understand from you, what metrics or KPIs do you believe are most important when evaluating the success of co-lending partnership between an NBFC, bank, or fintech?
Well, I think if you have taken Knight Fintech for doing your co-lending, you're successful.
Thank you.
And, if you want to be successful in co-lending, you're not successful as yet, go to Knight Fintech. So I know where to get the claps from. Okay. Let me just change the question.
मेरा LinkedIn का मेरा मिल गया.
नहीं.
Headline मिल गया मुझे.
बिल्कुल. Let me just build from where Sabya left. So Sabya left me actually thinking, if Navdhan is masquerading as a co-lending platform, and I was thinking just after this conversation, I'll probably speak to Keyur because we haven't spoken to Arca as yet. But I am feeling extremely discouraged. You know why? Because if Keyur doesn't get an assurance of credit, he's probably going to load it up on my hurdle rates. If he's going to load it up on my hurdle rates, the business ipso facto becomes useless for me, because then I don't have any kicker becoming a kick is the story, I would say.
Yeah.
So I think the new the co-lending guidelines, there is a risk of the kicker becoming a kick, and I'm just taking his words. That's one. The second is also that I would believe that regulator is trying to clean up the space. And first, the attention was towards the unregulated fintechs, and especially in the lending and the payment space. And now there is a lot of focus on the NBFCs itself, because most of the lending fintechs have become an NBFCs. So this is going to be the par to course. We'll all have to adjust to the new realities. And another point I want to pick up, so actually I don't have any original point. So I must admit all the points that I'm taking is from Sabya. The other point Sabya mentioned was about technology, right? So I think now incrementally having a good quality tech play will become integral to any fin play that you want to do. So I would say most of the financial services companies are becoming or gravitating towards becoming fintechs, and that convergence of fintechs and lending businesses at least is definitely on. I also foresee that 5 to 6 years down, most of the payment companies will become lenders and most of the lenders will become payments companies. So we're going to see a lot of convergence of fintechs, NBFCs and payment companies. My team is constantly telling me that we should take a PAPG license. And I keep resisting, bhai, हमारा काम नहीं, हम तेल बेचते हैं, हम साबुन नहीं बेच सकते. I'll stop there.
That was a really good one. Yes, Keyur. So I would also want to understand your perspective on what technological integration challenges, since you have taken a leap in this, at least on this panel about co-lending. So what, according to you, the technological integration challenges that you have encountered while establishing co-lending partnership with fintech platform, and how have you overcome that?
So while co-lending seems very seamless when we say it in theory, that it is just a ratio of dividing a loan into 80-20 or whatever that percentage is, but in true sense it is definitely not seamless. But I would say the tech has become seamless over the last 2-3 years, because I think there has been a lot of realization among NBFCs at least that they have to move up the ladder in terms of having those API stacks, right? Having those API layers to integrate with the fintechs. So I think, in my view, tech has become seamless for co-lending. The challenges have reduced. The challenges on the other sides have increased far-fetched in terms of operational challenges, compliance challenges, credit risk, all of that, right? So I think that is where I think NBFCs and fintechs are finding it difficult to have an alignment. Tech has become easy, but nowadays we see a lot of RBI is doing a lot of audits on digital lending. Even for a large NBFC, they are looking at each of the partners, right? So we have had, in fact, last 6 months, a lot of RBI queries in terms of seeing the flows of all the partners. They want to see what all do the partners do, how are they onboarding the customer, what are we doing, what are they doing, right? So a lot of scrutiny that has come from RBI in terms of how are we doing it operationally, and in terms of tech, what we are doing, right? At Arca, in terms of tech, we have built a good API layer, right? And that has worked well for us. And frankly, my fintech partners like me because my tech is very good. I charge higher rates compared to other larger NBFCs, but they still like me. They still give me higher volume because the tech is extremely, extremely smooth for them, right? And that is where I think the advantage is there in terms of getting a higher risk-adjusted return, not in terms of tweaking the policies or taking higher FLDG, right? So that is where the game is. So in my view, I think the winner will be one which will collaborate not just on tech, but also on credit risk, operational aspect, compliance, and most importantly, how do you serve the customer in a right way, right? And that is what the RBI wants.
Quick thoughts on new circular on digital co-lending.
So I still yet to be fully rolled out, but I think it was expected that some bit of it will come, right? I think lot of draft circulars have come. Some of it will impact a lot of the revenue models for NBFCs, right? There was a draft circular on foreclosure charges. I think that is going to have huge impact for the lot of NBFCs, small and medium size. On co-lending, again, there was a circular in terms of they want to kill the entire co-lending model too, right? So I think that is going to have a huge impact on especially mid-size NBFCs who have been doing it with PSU banks, right? Fintech and NBFC were still on CLM1, so I think that should be good. But it is going to really impact the likes of mid-size NBFCs who do it with, say, PSUs in terms of SITB or SBIs of the world.
Yeah, between fintech banks and the NBFCs.
Banks and the NBFCs. That is going to get huge impact. I think that will create, and I think even the small NBFCs, that should create a room for private banks and the larger NBFCs, right? Because the NBFCs who were doing it with PSUs, they will have to continue to do it for a better capital management. And I don't foresee PSUs moving to CLM1 immediately. They will have to eventually move there. But I think that will create a room for some time in terms of larger NBFC to tie up with smaller NBFCs to do co-lending.
Thank you, Keyur. That was really insightful. Rohit, I want to understand from you that with your focus on collection and connected banking, what innovation do you see emerging in next 2 to 3 years that will transform how NBFC handle payment, reconciliation, and accounting, customer onboarding? So probably this is also sort of a challenge that we see.
Yeah, I'll agree with my friends here, and Sabyasachi and then Keyur said, I'm just balancing tech first or risk first. How the things are moving when the circulars are coming. But then we play also a role in between somewhere out there. Right? Why I say tech first? Because disclosures for the borrowers are the king. Today you can say customers are the king. Borrowers becoming, getting those insights for them, balancing their business models will be the next challenge. For us, we have to put our tech stack along with these changes. We continuously keep working towards that. For example, in our stack, when we say we are collections compliance stack, we have split payments, right, where the payments between both the partners, the co-partners or the co-lenders. Such things we keep working upon it. Then coming back again, if we say, my friend Mr. Naval said, from a perspective of micro products, they are different. He spoke about tier 2, tier 3 cities. Penetration product segments are different. They are micro products. They are secured, unsecured. Then in that case, cost optimization for collections really play a role. And that's where products like UPay, AutoPay, or on-the-go dynamic QR embedded collections plays a typical important role into that. So that's one side. The other side, connected banking, which API banking, as I said, is another field where also helping in fast tracking the disbursal. It's a market, especially not for secured, for unsecured. It's a market where enhanced customer experience is very important. I was listening before this, the panel which was on customer experience, right, where you need a speed to market type of a model to deliver a solution or a product, or here maybe a loan, instant loan. That's where we are basically the connected banking APIs play a role out there. And within, you can say a second 10,000 plus disbursals. That sort of a capacity at Cashfree. We have a automated solution. We roll out that, integrate that for them. So these are specific areas where we'll also be marching along, and we also keep an eye on all the circulars every day, right? Anything changing, is it changing the money movement category also? And we need to change our tech stack accordingly. The challenge is there, but then I am sure the regulators are working to balance this marriage really well.
I think that is their core job. But thank you, Rohit. That was really detailed response. Nikhil, again, whatever question that I'm throwing, I think this is common people question. So, and even audience will adhere to what I'm saying, that we want to understand that in what ways can traditional NBFCs and digital wealth management platform collaborate to create more holistic customer journey from basic lending to wealth creation? I think that is where the entire world is moving forward.
So far, what we've heard about regulatory compliance, so, for me, it's easier said than done. But, it is actually the fintech companies and these people who are facing the music from the regulators. So, but I'll still give a thought at this. So, if we combine, right now, India as a country, we've moved from, let's say, 1% exposure to wealth products to 5%. This is again equity, and largely we've just seen a lot of insurance selling because there were a lot of LIC agents. So there are more LIC agents than advisors. Today we face a shortage of advisors in India. There are only 1 lakh advisors as we speak. Okay.
Advisors are registered one you are talking about.
So yeah, registered one. This will include RIAs, which are in fact very less.
Yeah.
I mean, they are like probably below 5,000, and others. The rest are mutual fund distributors who have incidental advice. So I think moving ahead from here, everyone should be able to have access to financial planning, even beyond the top 1%, because, or let's say even beyond metro cities. So if we combine their liability side of things, that is, what is the loan size, loan book, and what stage it is at. Let's say it is at 50% completion or 80% completion, or it has just started. They can plan their investment side in a more holistic way, and also the risk profile of the customer will determine the other side, if how much loan they can take. So I think a good marriage of both the sides. So we've not seen this holistic combination of both lending or assets and liability side. So once we'll see personalized journeys with the help of AIs, and a lot of data, access to data will help individuals do better financial planning, and also see a focus on goal-based planning. So I think moving forward, this is the way. People are still in the early stages of financial planning. We've just started as a country to actually start doing holistic financial planning. There's not even enough data that is available. People are hesitant to share it. 1, 2, probably technology is still getting built around everything except, let's say, mutual fund is the most mature industry where a lot of data is available very easily. We are still seeing aggregation of data in insurance. We are still seeing aggregation of data in on the security side, on the demat side, and so all these things will take time, because again there are SEBI regulations. So for fintechs to follow RBI regulations, and let's say on an average one new regulation every day, and combined with more regulations from SEBI, it becomes a difficult job. So probably that is why I started with it's easier said than done, because I think it'll be difficult, but I think like Sabyasachi said, once all of the bad things are cleared out, the regulation might get a bit easier for these guys to actually combine both fintech and wealtech and bring a platform which will reach to more and more people, and give financial planning accessible through these products.
I agree with you. I think all of us will agree with this point, that today, even in our corporate world also, you'll find only 1% of our colleague knows what to do with our income. Whether we should be buying, putting into retail, that is real estate, or mutual fund, or equity, what exactly. I think most of us are clueless. I think lots of education is also needed in that term.
Yeah. Just said that might be contradictory here. What to do with the income? Maybe Sabyasachi will say, let's give an instant loan for his spending. While we will be talking more about let's get into saving side.
All right. Sir, Naval, we have a last question for you. How do you strike a balance between traditional investment product and new age alternatives when curating offerings for modern investors?
Any investor
right? Whether you look at a traditional investor, modern investor, old investor, new investor, there are only three things which they look at. First is returns. Kitna banega, right?
Right.
And I'll come back to the point which Nikhil mentioned and even you touched upon about financial planning. I can challenge you that not even 0.1% of the people in India do any financial planning, because their only goal is to maximize the return.
Absolutely.
Right? And
Absolutely.
the question that you were asking, saying that what should I do with my money, probably most people don't know, because the only thought in their mind is, how do I maximize the return from this? There is no financial planning, there is no goal planning which really happens, right? So that's the challenge that we have. The second, from an investor's perspective, is liquidity, right? If I do invest, will I get the money back when I want it, right? A real estate investment is locked in. I mean, you will never be able to liquidate as and when you want to, right? And the third part, or the requirement from an investor's perspective, is the safety, right? So these are the three things which a typical investor will always look at when trying to decide where to deploy the money. Now, within all of this, the diversification or allocation becomes most important. In which product, right? You can do into equity, you can do into fixed income, you can do real estate, you can do gold, you can do silver, you can do real estate, and within real estate, you can do REITs, InvITs, and there's a whole host of product options which are available in India today, right?
Absolutely.
You also have the option of remitting the money outside of India under LRS and then doing dollar investments. But the most critical part is, how do you allocate it between all of this? And history has shown us that the maximum returns that you make is from a best allocation or diversification that you can do, right? You will never be able to time the market. So in terms of whether you do traditional products or modern products, it is best to allocate in the proportion that is right from your risk profile perspective, and also from the perspective of what is your financial goal and objective that you want to achieve. I mean, risky products could possibly be 5, 10, 15, 20% of your portfolio, but that will again depend on how or what is your risk profile. If you're aggressive, you're willing to take the risk, absolutely no problem, right? I mean, typically when you go to a casino, right, you will go with a 5, 10, 50,000 with the intent that I don't mind if I lose that money, I just want to go and have fun. Then that's a different thing. But that's not what you do in investments.
Absolutely. Thank you so much. It was really insightful. If anyone wants to ask any question, probably we can accommodate one or two. Feel free to ask. Any question? All right. So I think we don't have any question. Thank you so much for this wonderful session. Yeah, we have a question.
I think you would have covered this, but what are the legal issue you face when you collaborate with a LSP as an NBFC? Because you have talked about DLG and all, but you know, as per the digital lending guidelines, the responsibilities on the REs, whatever LSP does. So have you encountered an issue where you have engaged a LSP? The question is to, I think, Sabyasachi sir and the KU. Have you encountered a problem where there is a default by the LSP and the problem has come to you? How have you handled the situation?
So now that you said, I can recall an incident where we had a co-lending tie-up with a small NBFC, right? And we had built a decent book over time through that. And we had a situation where the other NBFC had decided to stop the business and not take forward the entire business line at all, right? We had a legal view in terms of how do we take it forward, right? So they were not gonna, and they wanted us to buy their portion of their loan, right? So if it was say 80-20, and we had built a book of say 10 crore, for example, then 8 crore was with us, 2 crore was them, right? And there were around a lot of confusion around legal terminology in terms of can we buy the entire portion of their business, right? because there are some regulatory examples in terms of we can't buy 100% unless they are closing the business. Otherwise, I can still take a 90-10 because then there is a securitization angle, but can I buy an entire business line from that company? That was one aspect. Second is, how do we work out the commercials? Have we covered it at the time of onboarding a partner, right? In terms of what if I take over their portion of the portfolio? What are going to be the commercials for me? What are going to be commercials for them, right? So these are various aspects we don't think when we onboard a fintech, right? In terms of we want to start as soon as possible, we want to do as much business as possible. But when the particular situation arises, then I think everybody gets into that confusion. So that was one example that I could think of.
No, I think time is up, but I'll just take 2 minutes. So what Keyur said is very correct. Every situation is different. So we also had one of our VC partner who just decided to run off. Yeah. So, but yeah, the new guidelines which has come up actually has given a lot of directive on that. So it actually talks about what kind of you need chartered accountant certificates in certain intervals, both from the RE and also from the LSP. You need to do due diligence, what kind of agreement you need to enter, but it is not foolproof. So, any legal case is never foolproof, right? So it's on situational. So you have to deal with it. It also talks about that you should, as a RE, have a BCP plan for a collection takeover. So now you see a lot of NBFCs, they don't go outside their geography. So if they are doing in certain geography, they do a BC in their geography only, so that they have a full-fledged collection team to take over the collection and back up there. Yeah.
No, I think my question was something different actually. What I was trying to understand, there is an obligation which has arisen. Now who will take care? Because as per your LSP agreement, you have already told LSP that you will be liable for your act, but as per RBI regulation, is the RE who is responsible?
No, it's very clear. So let me tell you, onboarding of customer, KYC, everything completely is on RE. Right. So the obligation what you are talking about is the DLG obligation. It stops there itself for the LSP. Agreed. So many people now have started asking for a DLG on a monthly basis so that you are not open for a very long period. So in case he goes off, then you know that you are only open for a 1 month. But the new circular is very clear that all obligation regarding to KYC, recovery, collection, fair practice code, everything is a RE's responsibility.
No, I agree on this. My question is something different. This was since beginning also. What will happen that there is a recovery issue, okay? Because you have appointed him as a recovering agent, right? Because he will be doing the collection also. He will be doing acquisition also. So while acquiring, suppose some data has come to him and data has been breached, right? You are responsible as per your back-to-back arrangement. You have made an obligation upon him. So how do you handle this situation? Because obligation has arisen. Now you can have back-to-back indemnity, you can have back-to-back issues, but you as a company, now you will have to handle that issue with RBI.
Yes. There is no let out for me. That's why I'm called a RE, he's called a LSP. Yeah.
Okay, thank you so much, guys. Let's give it up for the panelists. Please be there on the stage. I would like to request Ms. Shraddha Bhosle, who is the CEO and the founder of Krypton India, to please come up on the stage and felicitate the panelists. Ladies and gentlemen, give them a huge round of applause. First up, we would like to felicitate Avinash Jha, Senior Vice President and Head, Institutional Sales, Alliances and Strategy, Knight Fintech. Thank you so much for your time, sir. Thank you so much for all the questions and moderating the session. Thank you. Next up, we have Sabyasachi, Chief Executive Officer, Purple Finance Limited. Thank you so much for answering the questions of people present here. Thank you. Next up, we have Nitin Agarwal, CEO, Navdhan Capital. Then we have Nikhil Gupta, founder and CEO, Sage Capital. Then we have Rohit Katyal, Head of Enterprise Sales, Cash-Free Payments. Then we have Shiv Shankar Panigrahi, Chief Operations Officer, Capital India Home Loans Limited. Then we have Naval Kagalwala, COO and Product Head, Shriram Wealth. Then we have Keyur Vinci, Product Head,